Munaf, I believe these sheets are for you and me. Time for questions and answers. I think we've got like 5 or 10 minutes, and I'll be standing between you and something to eat. It's been a long day at work. So if there are any questions, we are happy to take them. Yes, here we go.
Yes, you talk about the structure of your portfolio and being in there for the long term, but circumstances change. I mean, a market might become very unattractive. So you surely have to change your portfolios at some point.
Yes, so yes, we structure for the long term, but it doesn't mean we don't pay attention. So in fact, yesterday we had a 2-hour meeting where we look at all the markets that we invested, all the funds that we invested in, and we look at valuations, we look at fundamentals, we look at all of that, but we're not going to make predictions about where to move to. So we're not going to move to, say, we're not going to ask the question, which market do we think will perform best next year? We look at kind of, if that example that I used of the S&P 500 being very expensive. So we saw that, and the way we acted on that was just say, well, actually, it's really the top end that's very expensive. Below that is actually quite cheap. So let's go there. So we kept the asset allocation, which is equity, US equity in particular, but we just executed it slightly differently. What we've also done a bit more is on the offshore side is upweighted emerging markets. And again, it's because emerging markets were the valuations were just so far apart on a historical basis that so it wasn't a prediction. And in fact, last year emerging markets up over 30% and developed markets about in the mid-20s. So it's at the margin that we try and add value.
Sorry. Thank you. Munaf, this one was for you. What are some of the tools or methods to help us identify our money scripts? And what script do you think our beloved president in the US has?
Ooh, Trump. I think, I was going to say senile, but it wasn't on the list. But to identify, so introspection in short, but because these scripts are formed in childhood, it's about going back to your childhood and questioning why you feel a certain way about money. So what did you hear your parents say, or what did you hear your teachers, your community, what did you learn back then that formed the potential belief, or that formed the belief? Also, the research where I've got this information from, they have created an assessment as well. So it's available, you answer the questions, and it sort of gives you an indication on what potential traits you have. Also, these scripts are not bad or good. We all have them, and there are parts of the script that are good for us, but there are parts of it that have a negative influence on our life. And when we become aware of them, we can start updating the negative parts. But yeah, the assessment is probably a good starting point. And it's also not that you only belong in one of the patterns. You possibly would have traits from one or more patterns as well. But yeah, I hope that answers the question.
Excuse me. Just 2 questions. What seems to be the buzzword now lately is the international wrap funds, the endowment things that, is very tax efficient and especially with capital gain tax and how do you scheme and how do you manage it. Are you thinking about that?
Yes, so in fact, it's not wrap funds, it's a wrapper.
Yes.
It's basically what they call a product wrapper. And that wrapper determines the tax treatment of the funds inside the wrapper. And essentially, your income tax is taxed at 30% and capital gains at 12%. This is for individual investors. What we look to do is we invest in what they call roll-up funds. So somebody like yourself, we might have a bit, balance between growth and income. The income portion rolls up and capitalizes. So you don't pay income tax, you end up paying capital gains tax.
That's right.
And so that offers a bit of tax arbitrage and some tax mitigation.
So
there are
will
also
that be-
estate planning benefits that go with that. The 91 wrappers is one of the ones that we do use.
So that will be another one of the product profile portfolios that you will start.
So in fact, our funds are available inside those wrappers.
Okay.
Yeah. So you remember the wrapper is the product. You get different types of products: retirement annuities, endowments, tax-free savings, provident funds. So those are your products, and each one is subject to different laws. So your retirement annuity is the Pension Funds Act, your endowment is the Long-Term Insurance Act, your unit trust is the Collective Investment Schemes Control Act, and Income Tax Act. So those wrappers are subject to different tax treatment and different estate planning rules and that. And so within each of those, so you can have the same portfolio in an endowment that you have in a retirement annuity. Okay, so your underlying portfolio could actually be the same in all those products, but it will be subject to different tax treatments, different estate planning treatments.
But that I found very interesting because it seems to be the buzzword now lately, especially the endowment one.
On the global side, yes.
Yes.
Endowments have been around for donkey's years.
Yeah.
So yeah, but I think on the offshore side it's become a lot more attractive.
Yeah. The other question is that your growth, is that net of fees or gross of fees?
That's net of investment management fees.
Okay.
Yeah, so depending on which product wrapper you're in, how much you have invested, and all of that, then your administration and advice fees would come off that.
Thank you very much.
Thank you very much, ladies and gentlemen. We will be here to the outside, so we look forward to interacting. Thank you for your time.